Hi there! In the first video, we introduced some basic concepts to help you understand how your money works. If you haven't seen it, click the link in the description below. This time we're going to focus on an important part of personal finance and the first step on your road to wealth, keeping track of your finances. So before you begin, you need to decide how you're going to track your money from now on. There are three principal ways you can do this. Keep a paper-based record book. This is the most traditional way to keep track of your finances. On the plus side, it means you only have to open the book wherever you are to see how you're doing, and it's quick and easy to get started. On the downside, you won't be able to do any fancy formulas, graphs and the like, and it does take the most time to keep updated. The second option is to subscribe to an accounts package. There are many personal accounting software applications available, so you can probably find one that fits your needs. However, some can be a bit inflexible, and most of the good ones have an upfront or a subscription charge. The third option is to do it in a spreadsheet. This is my favourite method because it's fast to keep updated, allows me endless ways to customise and report on my activity, and best of all, it's free. Have a go at creating your own, or if you're not as enthusiastic as me as building tables and formulas, I have created my own template for you to use that also conforms to the terminology and methodology used on this channel. More details on how to get this template are available at the end of the video or in the description below. There are two aspects to tracking your finances: logging and categorising, and reporting. The first part is very straightforward. For every transaction you make, log the date, description, amount, and then enter a category. We'll discuss categories a bit later. Once you start logging, it's important to ensure you don't miss anything out. Pretty much every online banking facility allows you to download your transactions into a handy file, like a spreadsheet. This saves a lot of typing, as you can just copy and paste the records into your spreadsheet, and then you've only got to do the categories. I use a month as a reporting period, as this is how often most people get paid and pay their bills. I usually update my records a few times a month, which gives me the right balance, ensuring my spreadsheet's up to date without creating a lot of work. So categories. It's vital that each transaction in your list is categorised so you can understand where you're spending your money. You can make this as simple or as complicated as you like, depending on what level of detail you want. We'll go over some suggestions now that I consider to be the minimum to give you the right level of information, and it's a great place to start. Income. Income is easy to categorise, as there's only a few types, sadly. Earned income is any money you've earned through traditional means, such as a salary. Passive income is money you've received from assets, such as rent from property, dividends from shares, royalties from intellectual property, interest on savings, etc. Sales income is money received from the sale of goods or services you have produced or offered. This is not quite the same as earned or passive, as your time and effort went in, and you have to repeat the process to earn more. Other income can be used for minor things like child benefits, gifts, things like that. Okay, expenses. Expenses are sadly much more common on your financial statement than income, so it's important to have good categories. Enough so that you can break down your outgoings, but not so detailed that everything ends up in its own category. Fixed bills covers everything that goes out by direct debit, and where the amounts don't change by much. It's used for bills that can't easily or quickly be gotten rid of. This means mortgage payments, utility bills, council tax, loan repayments, interest-free credit, car leases, insurance, etc. Variable bills can also apply to direct debits, but use this where the amounts can vary. Items in this category will be things you could cut back on if times were tight. Variable bills can cover bank charges, food shopping, petrol, credit card payments, etc. Investing refers to anything spent on assets, or where you expect a return sometime in the future. Saving is money put into a savings account. Whilst it's technically an investment, the funds are usually available much more readily, and it's good to keep it separate. Education covers investment in education and personal development. Personal development is often shunned, and people see their education finishing when they leave school or uni. This only guarantees your knowledge remains stagnant. This topic is so important, there will be a video dedicated to it in the future. Charity covers donations to charity. This is a personal choice, of course, but I highly recommend regularly donating to some worthwhile causes. What's the point in being wealthy if you can't help others? I budget 5% of my income for these two categories. Luxuries refers to anything you spend that is not covered above, in other words, liabilities. These are things that you could eradicate from your expenditure if your life depended on it. This includes eating out, gifts for family and friends, days out, holidays, clothes, furniture, decorations, and anything else you can think of. These expense categories can be broadly summed up as living expenses, investing, and luxuries. Most people are surprised how much of their monthly income goes on luxuries when they sit down and work it out. All you have to do to set yourself on a course for wealth is divert some of your spending on luxuries into investing instead. It really is that simple. Unfortunately, this is seen as boring and it takes too long to see the results. Today's society is all about instant gratification, buy it now, interest-free credit, payday loans, and other mechanisms that distract people from long-term goals. Okay, so that covers the tracking part. Now for the reporting. Reporting on your finances can be a bit trickier if you're not sure what to look for. I find it best to analyse my income and expenditure in the above categories every month. When you start tracking, you'll probably see a lot of variation between months, particularly in the somewhat unpredictable luxuries category. After a few months of tracking, you should be able to identify any trends or areas where you are wasting money. At this point, it is highly recommended you create a budget. This will help you understand how much you are allowed to spend on luxuries and can guide your financial strategy. Budgeting is covered in more detail in another video. There are endless ways you can report on your finances, and more advanced metrics and ratios will be covered in the future. To start with, it's vital that you understand your cash flow. This is the net spend for the month, as discussed in part 1. You should aim to finish each month with a reasonable amount remaining that you can then save or invest. This is an obvious statement, but millions of people set out with this intention every payday, only to end up with a deficit. The first step to rectifying this problem is to understand your cash flow and stick to your budget. It sounds simple, and it is, but it's also easy to do it wrong, especially if you don't have control over your finances. If you're still a bit lost, or you want to see this method in action, why don't you check out the tutorial video for the template I mentioned earlier. You can watch the video without buying the template, so it might give you some ideas, and if you decide you want the template, you can do that too.